Hello back. Okay, so what we're going to do here is in the accounting worksheet, we learned how to put accounts, transactions into the right accounts. After we get all of that done, what we have to do is we have to do financial reports. And the financial reports that we're going to be doing today are the income statement, a statement of stockholders' equity, and a balance sheet. Those three are the required ones. There's also one, the statement of cash flows, but for this section, we're not going to cover that. So I have Otis Travel Agency, and I have all these accounts. They're listed in alphabetical order, so that's not the correct order that they go in. Common stock was 525,000, and retained earnings was 1,250,000 as of January 1st. During the year, additional common stock of 50,000 was issued and cash dividends were paid of 90,000. So just to save a little bit of time, I have already categorized these, but we'll go through these one by one. So we always do the income statement first, and the date of this is for the year ended December 31st. I did 2020. The for the year ended is extremely important because there's one of these statements that doesn't use for the year. I apologize, it uses a certain date. So on the income statement, we are looking at any income that we've earned and reducing it by the expenses that we had for the year. So on this one, our fees earned, and we will go over here, were 940,000. Okay, I'll put that in there. Next, we list our expenses. Now, this is just a very sample income statement. We will be growing this income statement. This does not list all the accounts, but just this gives you an idea of what they look like. So all expenses, if it has expense after it, it belongs on the income statement because those were expenses that came out of our income. So miscellaneous expense was 19,500. We had rent expense, which was 56,000. Supplies, that's not an expense, but supplies expense was $12,700. Utilities expense was 34,800, and wages expense was 415,000. So if you look over on this side, on the left side, there was nothing that had the word expense in it, so it did not belong in the income statement. Over here, only one account did not have expense, supplies. That is an asset that we have, so that's not included on this. Your fees earned, this is your revenue. This is the money that came into your business. So your revenue for this as a service company is fees earned minus your total expenses gives you your net income. So your company for the year after you've completed all your services, you had all of your expenses, you earned a net income of $402,000. That is going to come in handy in the next section. So after you complete the income statement, we're going to do a statement of stockholders' equity. And this has your involves your retained earnings, it involves common stock, you have to do the income statement in order to understand your net income. And the one account that everybody kind of messes up on, and this happens all the time, is dividends. Some people want to put dividends in the income statement. Dividends affect the stockholders' equity section, so we will put it in the statement of stockholders' equity. So on my information, it said common stock was 525,000. Now I'm showing you this format, but in future classes when we get more experienced with these financial statements, this statement will change a little bit, slightly differently, but not so much that it's going to freak you out. Okay, so just know that this is what we're going to show right now, and then later on we'll probably put this in just a little bit more of a different format. So it said retained earnings was 1,250,000. So right now our balance with our common stock and our retained earnings was 1,775,000. Now we did say that we issued additional common stock of 50,000. Does not change the retained earnings, but that totals our issued our common stock. We have net income. Net income came from your income statement. That affects retained earnings. So I will put the 402,000 in the retained earnings. Okay, retained earnings is how much is left in the account. So make sure you don't put it in common stock. Common stock is, we'll get into that more detail, but that is a certificate that shareholders have in their hands. So net income does not increase common stock, it only increases retained earnings. Dividends, we paid out, according to this, we paid out 90,000. That's only going to reduce our retained earnings. It does not touch common stock. Even though they're connected, we're never going to affect that common stock with dividends. We're going to reduce our retained earnings. So what we have for our statement of stockholders' equity, our balance as of December 31st, is $2,137,000. After we have done these two statements, we can now do our balance sheet. This is a very simplified balance sheet right now. We're going to just get into the basics, and I promise we will expand on this balance sheet later on throughout the semester. So our assets. Cash is the number one asset that you list first. It's based on liquidity. We could go to the bank today and withdraw cash right away and have it in our hands. Okay, so we want to put it the most liquid account that we could possibly get cash from for us. So over here I have over here that cash is 200,000. The next liquid account is accounts receivable, because that's what our customers owe us. And hopefully, and we'll discuss more on this, but hopefully they are paying us on a timely manner, so that's another fairly liquid account. So accounts receivable, according to our accounts over here, was 539,000. Supplies, we can use those, we could sell those, so that's another liquid current asset. And I have supplies. Remember, it was it was muddled into these expenses account, but we have $6,000 worth of supplies in our office. Land, we own land. Okay, so land is an asset. Our land is totaling $1.5 million. So our total assets is $2,245,000. Next, we go to the liabilities. As we discussed on the accounting worksheet, we only worked with accounts payable. So right now, accounts payable is our only liability, and that is $108,000. Okay. Next is a stockholders' equity section. And this is why we had to do the statement of stockholders' equity in order to get the statement of the stockholders' equity section. So common stock, our grand total. Remember, we started off with $525,000. We issued $50,000 more of common stock. So our common stock balance is $575,000. And that's going to drive me nuts, so I'm going to make that 0. Okay. Retained earnings. We had to do the statement of stockholders' equity to understand what our beginning retained earnings. We had our beginning retained. We had net income from the year, so we increased that. We paid out dividends, so remember, dividends reduce retained earnings. So then our retained earnings balance is $1,562,000. In order to make our accounting equations assets equal liabilities plus stockholders' equity, this balance sheet will prove if we have that going on. Our total assets were $2,245,000. Our total liabilities plus stockholders' equity is $2,245,000, so we actually do balance. So this is, again, just a very simplified balance sheet or financial statements. We have not touched on the other statement, the statement of cash flows. It is in the reading. We will discuss that later down the road, so don't worry about it. You'll get exposure to it. But I hope this helps, just giving you a nice summarized format of what the financial statements that go to the external, the banks, the shareholders, all those important people that want to know what's going on with the business will help them see that. Thanks and have a great day.